So essentially, with the bank reviews, I mean, if you do have to do a bank review, like when you are getting an email from your banker, typically this is what they would be asking for. Again, if it's just a simple behavioral review, more than likely they will just ask you about your letting pool number and the composition, holiday, permanent, things like that. They will want to see your letting agent license is still valid and current, and then obviously the trust account report. That's a must, and then with your tax liability. So they don't want you to be behind with tax. So yeah, basically all of those things. And then again, financial and tax returns. That's the thing that they will need if it's of a higher amount, or if they suspect something have happened during the year. So essentially, I guess the main. Okay, we'll come to that. So they would typically ask for those type of documents, but the reason they are asking for those type of documents is to sort of make sure all of these conditions are still met. So typically you will see, you cannot drop your letting pool by more than X percent, 10%, 15%, depending on the size of your complex. Obviously that equates to different number of units, so you need to be wary of that. I guess another thing, the financial covenants. So some banks works on either one of the two numbers, and some banks will actually work on both numbers. Interest cover ratio and debt service cover ratio. Does anyone know how to work those things out? No? Okay. All right, so I can really show my value here then. Right, so typically interest coverage ratio is from, so basically the formula is your net profit or EBIT, so earnings before interest and tax, divided by your interest expense for that year. So essentially, they want to make sure from the interest perspective, you have, just say, for example, 2 times. So basically, whatever you have left over as profit, you can cover the interest twice. So if the profit is less than twice of the interest that you're supposed to pay, then we've got a problem. We've got a breach of that covenant. The debt service cover is more from the principal and basically from the repayment perspective. Essentially, that covers your interest and your principal repayment. So basically, again, the profit needs to be 1.25 times of your your annual repayment. So the difference, I guess, here is interest only or P&L. Mm-hmm. So if you are talking about debt servicing, that's P&L. So you need to cover that ratio of that. And when you talk about interest cover, that's the interest only component. But generally, I think for most banks, if they have both requirements there, if you meet the interest cover, typically you would meet the debt servicing cover generally, but be wary of that. I guess this is something that you probably need to talk about, to talk to your accountants about, so when they do your tax returns and financials, just to make sure you are still satisfying those requirements. And then I guess the whole idea with dropping letting pools and things like that, it's again coming back to the ratio that is set out in the loan contract. So obviously, if your letting pool has dropped, the value of the business might have dropped as well, and then because the loan amount is still there, so that might trigger a further investigation or revaluation of the business, just to make sure you're still having that LVR. And then the rest of the documents, that's linked back to the previous slides. So essentially, they just want to make sure that your license are current, your tax payments are up to date. And one thing for that is that they typically don't like payment arrangement with the tax office either. So you know how for normal trading business you can have a tax arrangement. Some people might even use tax office as a bank for delaying the payment to the tax office. But for management rights, the banks typically don't like that. Insurance, so that's public liability and professional indemnity. So generally, you will have to renew that and provide the bank with the information. And then I think this is something that Jessica touched on before. So the options. So this is probably not in your annual review, but when it comes to exercising your option to extend the agreement term, you have to do that, and you need to let your bank know that you have done that as well. And then obviously trust account. So trust account audit reports and things like that, just make sure that you keep up to date and sort of talk to your accountant or auditor about the operation of the trust accounts.